Welcome to Investors Insights. Our topic today is the race between inflation and productivity. I'm going to give you some details on that and some big reports that are coming out this week. But before I do that, Ty, why don't you tell us about the good information you brought us this morning about the race between where we have the top of the market that was growing for years and getting more concentrated, and now we're seeing broadening out, how that looks. Ty, why don't you give us some information on that?
Yeah, a big theme for this year so far has been the broadening out of the market. And by that, we mean, we've been talking about a concentrated stock market where the top 5 or 10 stocks or the, Magnificent Seven have really overperformed the rest of the market. And this year we have gotten basically the exact opposite, where some of the smaller stocks, or they're still huge companies, but some of the other 493 stocks in the S&P 500 have really started to pull their weight. So as you can see in this chart, the S&P 500, people talk about, hey, the market's been maybe a little rocky this year. We've had some pullbacks. Midterm years lead to volatility. However, the percent of stocks above the 200-day moving average is 68%. This is the highest level since 2024. So overall, things are intact. Here's another chart that shows the percent of stocks at 52-week high. It's in the roughly 96th percentile, which is incredibly strong. And then lastly, I think this is probably the most powerful chart. As you can see, in 2023, 2024, and 2025, here near the top, all the top 10 stocks in the S&P 500 contributed a very large total of the S&P overall performance, over 50%. If you look down all the way here at the bottom of the chart, 2026, the market is still up year to date. However, the top 10 stocks have actually detracted from performance by 26%. So that tells you that overall the market is still doing well, but those top 10 stocks are not helping with performance right now, and that's definitely a paradox to what we've seen the last few years.
Yeah, thanks, Ty. Yeah, so that is somewhat healthy though, because you want to see more of the economy, more companies participating in a rally, and we'll get two very big data points this week to see if that support can continue. We've been like I said, we've been talking all year, and we think 2026, one of the big topics will be the race between inflation and productivity. Can per unit labor output increase at a faster pace than costs? Break that down. Can wages grow faster than costs can? And that's an important distinction that can help an economy grow stronger and broaden out who is participating in that growth. So this week on Wednesday, we're going to get the jobs report, which was delayed on Friday due to the temporary government shutdown. And then on this Friday, we'll get the consumer price index. So we get data on jobs, and then we get data on inflation this week. And how does that kind of go back into the economy and into the stock market? Well, as this chart shows, the stock market has support as long as the 10-year Treasury yield remains below 4.5%. With 10-year Treasuries currently at 4.2%. You can see in this chart, it's remained relatively flat below that 4.5% and above that 4% for more than a year, for most of a year now. And so that's an important indicator we're watching. And the 10-year Treasury will remain tame as long as inflation remains tame. If we have a spike in inflation again, you're going to see a spike in interest rates again. And then inflation will remain stable as long as we can have productivity, as long as productivity output workers are producing more with each hour's work, that keeps inflation under control. And so all of this kind of rolls back into each other in what we hopefully will be a positive reinforcing loop as opposed to a negative one. So these are two very important data points we're going to get this week that will help feed into the data points that Ty was talking about in the market. A broad market, a broad economy gives us a good basis for growth into 2026. I hope you found this helpful and informative. Please, if you like this, forward this to friends, family. You can follow us on LinkedIn, Twitter, Facebook, Instagram now. So feel free to forward it through that output as well. Thank you so much. Have a great week.